The market's a wild ride today, isn't it? Extreme fear at a 9, and Trump policy risk hitting level 3. Here at Denver Stock Lab, we cut through the noise with an engineer's eye, breaking down tech stocks like nobody else. Today, we're diving deep into the semiconductor giants, NVIDIA, TSMC, and ASML. Let's get to it. Alright investors, buckle up. NVIDIA, the AI giant, took a hit today, closing down 2.17% at $167.52. This bearish session pushed it below its 20 and 50-day moving averages, signaling a clear downtrend. With markets stumbling amidst renewed Trump tariff uncertainty, even a supercharged growth stock like NVIDIA feels the pinch. Retail investors should watch closely. Are we seeing a dip to buy, or the start of a deeper correction for this tech titan? Alright, let's dive into NVIDIA's fundamentals. With a massive $4.1 trillion market cap, its growth is undeniable. EPS, or earnings per share, exploded by 95.6%, and revenue surged 73.2%. While the PE ratio is currently unstated, these figures indicate a company firing on all cylinders. Wall Street is overwhelmingly bullish, with 67 buys. They even beat last quarter's earnings estimates by 3.6%. The high beta of 2.38 means it's volatile, but the low 1% short float isn't a concern. Insider selling of 1.4 million shares is worth noting, though, suggesting some profit-taking. Alright, let's dive into the NVIDIA chart. Currently trading at $167.52, the Relative Strength Index, or RSI, is at a low 31.4. This means the stock is approaching oversold territory, suggesting it might be undervalued short-term. All our key moving averages, the 20, 50, and 200-day, are above the current price, indicating a bearish trend. Watch for strong support at $167.52, breaking that could signal further drops. Resistance sits at $186.03. MACD also confirms bearish momentum, so caution is advised. Now, for the bigger picture, NVIDIA's future hinges on AI. Despite export controls to China, the CHIPS Act could fuel U.S. expansion. The real near-term catalyst? The ramp-up of their new H100 GPU. Wall Street's overwhelmingly bullish, with 92% recommending buy, echoing the one supercharged growth stock to buy before it soars 318% sentiment. This H100 is expected to drive massive revenue growth. Keep a close eye on NVIDIA's next earnings report for H100 adoption figures. Alright team, let's dive into the chip giant, TSM. Today, Taiwan's semiconductor manufacturing company closed up a modest 0.19% at $326.74, a small glimmer in what's been a tough market. While we saw some institutional selling, the real buzz is the looming Trump tariff uncertainty that's rattling global trade. This macro news is a big reason for the overall market stumble and definitely something every retail investor needs to keep an eye on when considering TSM's future. TSM's fundamentals reveal a strong growth trajectory, with 35% EPS growth and 20.5% revenue growth. The company beat last quarter's EPS by 5.2%, and insiders have been net buyers, which is a positive signal. With a market cap of $1.7 trillion, Wall Street is overwhelmingly bullish, but the lack of PE ratio makes it difficult to assess valuation, as PE, or price to earnings, measures how much investors pay for each dollar of earnings. The RSI, a measure of recent price changes, is at 38.9, indicating TSM isn't overbought or oversold. The moving averages, which track price trends, are above the current price, suggesting downward momentum. We're watching support at $326.11 and resistance at $368.07, with bearish momentum building, as indicated by the MACD. The bull case for TSM is strong, with 41 buy ratings and a high price target, driven by the CHIPS Act and potential supply chain reshoring. The key near-term catalyst is the U.S. export controls on semiconductors to China. Watch for the potential ramp of TSM's 3nm process node, expected to be used in Apple's A17 Bionic chip, and monitor the stock's resistance level at $368.07. Breaking news, ASML just closed down 2.03% at $1,302.47, a significant move. With the market stumbling due to Trump tariff uncertainty, as reported in the stock market stumble as global trade faces more Trump tariff uncertainty, this bearish session is worth noting, especially as the stock is now below its key moving averages, a trend retail investors should be watching closely. ASML's fundamentals show a growth trajectory with 7.2% EPS growth and 4.9% revenue growth, although they missed last quarter's EPS by 4.8%. With a market cap of $511 billion, Wall Street consensus is overwhelmingly positive, with 33 buys, indicating a strong outlook. The AI score is 53, and the short float is low at 0.2%, suggesting minimal downside risk, as analysts see potential for the stock to head higher. The RSI, a measure of recent price changes, is at 42.9, indicating ASML's not overbought or oversold. The moving averages, essentially averages of past prices, show a downward trend. We're below the 20 and 50-day averages, with support at 1,292.80 and resistance at 1,423.54. The MACD suggests bearish momentum, meaning selling pressure is building, so we'll watch these key price levels closely. The real catalyst to watch is the expected ramp of ASML's new high-NA EUV system, driving the bull case with strong buy ratings. With the CHIPS Act and tariffs on semiconductors, ASML is poised for growth. Monitor the earnings report in 2 weeks to see if ASML can beat estimates and justify its high price target. Breaking news, Micron Technology just closed up 0.5% at $357.22. This subtle move may seem insignificant, but it's a bullish signal amidst the current market uncertainty, particularly with the U.S. mulling ground troops in Iran and its potential impact on oil prices and the Dow Jones futures, which could have a ripple effect on the tech sector, making Micron's steady performance worth watching. Micron Technology's fundamentals reveal a strong growth trajectory, with 756% EPS growth and 196% revenue growth. The company beat last quarter's EPS by 27%. With a market cap of $403 billion, Wall Street is bullish, with 49 buys and a short float of 2.6%. Insiders have net sold shares, a potential signal. The lack of PE ratio suggests uncertainty, but EPS growth indicates a promising outlook, with Wall Street likely pricing in future growth. The RSI, or Relative Strength Index, at 42.3, indicates Micron's price is relatively low compared to recent highs and lows. The moving averages, like a 20-day average of $406.51, show the stock's trend. With a price of $357.22, we're below these averages, indicating a downtrend. Key levels to watch are $355.46 support and $461.73 resistance, and with bearish MACD momentum, selling pressure is building. The bull case for Micron Technology is strong, with 91% of analysts giving it a buy rating. The CHIPS Act and demand for AI accelerators are driving growth. Watch for the ramp of its new 1-beta drum product, a major catalyst. Monitor the stock's resistance level at $461.73, a key test of its upside potential, as the company navigates U.S.-China trade tensions and supply chain risks. Today's market mover is ARM Holdings, plummeting 6.89% to $144.13. The drastic drop sparks concern, especially with the Fear and Greed Index at extreme fear. With SoftBank's $40 billion loan to deepen its AI bet, investors are watching closely, wondering if this dip is a buying opportunity, given the company's strong uptrend and healthy bullish momentum. ARM Holdings' fundamentals show a strong revenue growth of 26.3%, but a decline in EPS growth of 12.3%. With a beta of 4.13, it's more volatile than the S&P 500. Insiders have net sold shares, a cautious signal. The company beat last quarter's EPS by 4.6%, a positive note. Wall Street is largely bullish, with 27 buys, and a price target suggesting upside. The RSI, or Relative Strength Index, is at 69.7, indicating ARM Holdings is overbought. The moving averages, which show us the average price over time, are all below the current price, suggesting an upward trend. We're watching support at $114.38 and resistance at $157.07, with momentum building due to the bullish MACD crossover, indicating a potential further price increase. The bull case for ARM Holdings is strong, with 27 buy ratings and a potential upside catalyst in the ramp of its new Cortex-X3 and Cortex-A715 cores. The recent news of SoftBank's $40 billion loan to deepen its AI bet is a key driver. Watch for the design wins with major customers like Qualcomm and Huawei, and monitor the stock's resistance level at $157.07. ARM leads the pack today with a strong buy signal. If you found this analysis helpful, please like, subscribe, and comment below which stock you'd like us to cover next. Remember, this is for educational purposes only, not financial advice. Do your own research, and keep in mind past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab. We appreciate your support, and we'll see you in the next video.